Hello friends, now we move ahead with the third video in this entire series where we are discussing the process of identifying the comparable transactions, right? You have understood the methods, theoretical aspects, practical aspects where we can in certain scenarios where what type of methods we can use, and now we are going to understand that what is the process which needs to be followed when you are when you are going to identify a comparable transaction. I'll just share my screen and I'll explain that one by one. All right. So guys, as you can see, for identifying the comparable transaction, there is a process and we'll go ahead with that process, right? So first in that process comes selection of tested party. Now, a tested party in practical terms is a party which has a very least complex functions, which performs very least complex functions, and of which you can identify the data, right? We'll see the OECD's definition of tested party and then appropriately we'll analyze ahead. Now, if you see OECD guidelines, it provides for this statement with regards to the tested party. So what it says that as a general rule, the tested party is the one to which the transfer pricing method can be applied in the most reliable manner and for which the most reliable comparables can be found. Easy to understand? So that is what it will be. It will be most often be the one that has the least complex functional analysis. Now, when you do the functional analysis, you characterize two entities, right? You draw up a functional profile for two entities, one main entity and the other would be the entity which performs comparatively lower functions compared to the main entity. Now, in our prior example, if you recollect, we had two manufacturers, that is two related parties were manufacturers only, but out of which one party was also owning brand. It used to also oversee the business of other entities. I am just presuming certain things right here. It used to also deal with retailers and it used to also perform strategic functions with regards to the marketing part, right? Now that entity, if you just compare that entity and the other entity to the transaction, that is related party, comparatively the related party who was just a manufacturer and supplying goods in particular geography or to particular sellers, it had less complex functions compared to the main entity, and hence in that particular scenario you can select the tested party, that is the other related party who perform less manufacturing functions as tested party for testing the transaction which has been undertaken by the main manufacturer and this related party, right? I hope that clarifies. We'll also go ahead to understand what is the meaning of the least complex. So guys, the least complex involves entity which has, so the entities whose functions are less complex in nature, that we understood. Second is which does not owns intangible or owns routine or limited intangible. So in a service transaction, you may, when there's a service transaction, you can understand that which entity uses less intangibles compared to the entity which uses higher intangibles, or which is involved in developing the higher intangibles, or which owns higher amount of intangibles. So second scenario could be applicable in that cases, and the third is results of which can be verified using reliable data that requires the fewest and most reliable adjustments. So practical thing, right, where you can rely on the results of third parties to benchmark the transaction undertaken by the tested party with its A, right? In such scenarios, you can use the tested party. I hope this clarifies. Now I'll just move ahead. So once you select the tested party to the transaction, then you need to understand the types of comparable data which is available for analysis, right? Now, predominantly there will be two types of comparable data in any scenario. If you are using CUP, RPM, TNMM, CPM, etc., there are two types of data from which you can find the uncomparable, from which you can do the ALP analysis. What are these two types of data? First is internal comparable. Internal comparable is nothing but the data which is there available with the taxpayer, assessee or the company, right? Which can, so it may happen in situation where the product is being sold by the taxpayer to its related party and the same product is being sold by the taxpayer to the unrelated party. So if I am comparing the prices in both the scenarios, that is with related party and with unrelated party, then they are called internal comparables. Now, in similar manner, when you are benchmarking the transaction with RPM or TNMM, you may have segmental data, that is if there have been sales made to the related party and there has been sales of various product or services made to unrelated party, then you can prepare a segmental, and if they are obviously the segmentals need to be comparable, so same sort of services or same type of almost similar type of goods and services should be sold to the unrelated party. So in such circumstances you can draw up an internal segmental profit and loss account, and you can compare the margins also, be it gross margins or be it the net margins, right? So these are called internal comparables, which are available within the group or with the taxpayer, from the perspective of the taxpayer or its say, the data is available from the both ends, right? But they are available internally in the organization itself, in the entire group itself. So they are called internal comparables. Like if you are also comparing a royalty agreement which has been which has been entered between the parties, between the associated enterprise, and the royalty agreement which one of the enterprises entered with the other third party enterprise in case of brands, fashion, etc., then then you can, so that's an internal comparable data technically that you have available within the organization. And the second type of data is external comparable data. That is where you have to search on the public database or whatever the portals which are there available from which has this type of data, and appropriately you can analyze that third party situations and compare that with your particular transfer price. So these are called external comparable data. Now I hope it is easy to understand internal comparable data and external comparable data. Also one thing, as I keep saying, that in case if you have any doubts, please be active on Telegram community, and if doubts are of more sort of technical nature, we can always pick up that doubts during our live sessions which we are going to start from the next week, right? So we can you can also discuss at that point of time any article, or you may find out also some article on this comparability analysis, that is type of comparables or methods or the selection of tested party, because every now and then something or some up comes up, any ruling comes up, etc. It may happen. So we can also discuss all such type of things during that particular session. I'll just move to the third point, which says that certain consideration in identifying comparable transactions. Now, when you have a set of comparables, right, there are certain considerations also which you are required to consider before arriving at a conclusion or before taking that comparable. Now what are those? We are discussing that. First is lack of comparable data with exact facts, right? You should not select some comparable which does not have particular amount of facts, right? So this is one of the things that you should keep in mind when you are selecting that comparable. It should have all the relevant facts which are required for the comparability analysis. Then cherry picking of comparables. So you should always avoid cherry picking. Cherry picking is basically you are selecting comparables basis on the result or basis on the prices. That is a cherry picking. You are doing doing like a partiality to certain comparables by not selecting them, and by certain comparables by selecting them, which favors your situation. So you should always avoid cherry picking of comparables. Generally, as a taxpayer or tax consultant, you won't be, you won't go ahead with that practice. But if a transfer pricing officer, we have seen during assessments, the transfer pricing officer will, bring out some comparables which will have same characteristics, and there would be also other comparables which he would have rejected in his analysis, which would have been comparable in other way. So he would have cherry picked that comparables. So in such scenarios, you should be able to identify such type of cherry picking comparables, and you can always place your arguments on behalf of client before the assessment officer also. So the cherry picking of comparables should be avoided. Then you should also avoid comparables with losses or abnormal profits or having some extraordinary events. So extraordinary events would mean merger, acquisitions. So such type of in that particular year, if that comparable has gone under the situation where it has reported some extraordinary events, or where it has posted some abnormal profits, or it is consecutively facing losses, then such type of comparables should also be avoided when you are choosing a comparable transaction, right? And segmental financial data. Now this may happen that your comparable entity would be engaged in many businesses, but you should identify the most comparable segment if it is possible to find that segment, and that segment has been reported under the financials. Then you should select that segment rather than selecting the entire, when you do the analysis, when you select the entire profit and loss account, in segmental available and that segmental relates more to your particular case, then you should only go ahead with that segmental profit loss. You should avoid considering the entire profit loss for benchmarking analysis. So these are certain considerations for identifying the comparables, right? This you should take. I hope this day 4 clarifies all your theoretical and practical aspects. Now from tomorrow, day 5, what we are going to learn, I'll just show you the part where we are going to analyze the data set, and our discussion tomorrow will be on the data set aspects, that how you should, how data set will look like, what is data set, how you should arrive data set under various methodologies. I'll discuss all such things tomorrow. So, keep learning and enjoy this journey. And before you complete, before you come, don't just jump to this day 5 or day 4. Complete all your videos, which one by one easily, and then after you'll be able to understand that entire transfer pricing process. We are right now under part 2, that is computation of ALP, right? I'll catch you tomorrow in the next video, and enjoy. Have a happy learning.